All right. I am here with Sarah Hawley, and she is a serial entrepreneur. How's it going, Sarah?
It's good. Thank you for having me, Steve.
Yeah, I'm really excited to unpack your multiple successes here. But before we get there, let's talk about your background. How did you get started
hmm
in business?
Family. My dad was an entrepreneur, and so I didn't really know that I was growing up around it because they didn't really talk to me about it. But ultimately, I was, and I guess it rubbed off on me. And I started working with my dad when I was 18, like first job, and then ended up taking over the family business. And, a whole lot of things, including an exit, came from that. But yeah, I think it was kind of just born into my blood. And I tried working for other people a few times, different part-time jobs and things. But, once I was in my family business, I was like, yeah, this is it. Like, I have to own something for myself. I have to be in charge of my destiny. And I don't do well, like being told what to do. So
And what was the business? Like, what kind of business was it?
financial planning. So yeah, I fell in love with financial planning and business at the same time. So I ended up doing like kind of paid my own way through a business degree with a major in financial planning. So I kind of got both the education side by side and just loved when my dad was explaining like not only what we do for our customers, but like how we make money doing it and how the business operates. I was like, this is so exciting. And then actually when I was about 25 is when I started getting really serious about business. And that's when we really decided like, okay, I'm going to one day take over this company. And he got sick for about 18 months. He was barely in the office. And it was during that period that I just started picking up all the stuff that he had previously been doing because I had prior to that just been doing financial planning with clients. And I realized even more how much I loved it, how natural it came to me. And from that moment on, it was like, yeah, I'm going to be like a business owner, a business leader. So ended up like 17-year career in finance, financial planning, accounting, but also started other businesses along the way. So for sure, I would say fit the definition of an entrepreneur. Like I'll pursue anything that's interesting to me, where there's a viable business model that I feel passionate about.
And I have found, and I like that you kind of shared the story there around not only servicing the client, but also seeing behind the scenes how the operations worked. And I have found that with finance specifically, it builds confidence in people to take risk because it's more of a calculation at that point. And I've noticed that over the years of people that I talk to that come from finance that seemingly do very well in business because it's all sort of a calculated risk as opposed to just taking a leap in people that don't really come from finance. But that's a really cool start. How was the first venture kind of formed? Did you get a co-founder? Did you raise some money? What did that look like?
So my first real business was kind of deciding that I couldn't steer the ship of my dad's business as far in the direction that I wanted. I started to get some other passions that were really alive within financial planning that I wanted to pursue. And I met who later became my husband, and we decided to start our first company together. So we did buy a small business which we just paid cash for. It was like, I don't know, $100,000 acquisition or something like that, nothing crazy. And then we later purchased another business that was more like $1 million acquisition that we borrowed for in that same company. But we didn't do any fund rate. I basically bootstrapped everything until my most recent tech company, which we'll get to. But yeah, it was a private wealth management firm for retirees, pre-retirees, high net worths in Australia. So we did that. And then from that, it was kind of like family office style, essentially, which is pretty cool. Like I look back and he was 25 and I was 27, I think. And we had these like 60, 70-year-olds trusting us to manage their money. And I'm like, damn, it's amazing the confidence you have when you're young. Like you just
Yeah.
can't even see that that's a little bit delusional, but you just go and do it and people believe you. And I mean, we did a good job, but it's wild sometimes to think back. And I'm sure other entrepreneurs can relate to that because the start is the best, especially when you're young, because you have nothing to lose and you have everything to gain. And such an awesome season. Yeah. And then from there, we ended up having a lot of millennials asking us, well, what about advising us? What about our finances? And we were like, shit, there's literally no financial planners working with millennials. So we were the first millennial focused financial advisory business in Australia. And we made a really big name for ourselves. So we kind of like started that within that business and then pulled it out over there. And then we got super passionate about that. So we sold the first one. That was my first exit.
Got it. Got it. And what did that look like? Because it was just basically like assets, right? You were kind of parsing it out and selling that, and you kept running the millennial focused.
Yeah, we had split the businesses and brands at that point. And so, yeah, we essentially sold the
Okay.
client list and everything that we did for them to another financial planning business. So they already had all of the staff and the
Mm,
systems and resources, and they were making their business bigger essentially by acquiring our clients.
cool, cool, cool. All right. So you run the millennial focused financial planning in Australia for a few years, and then what happens next?
Yeah, I had about a 5 year time frame on my companies back then. So we did We Private, sold that up to 5 years, did Wealth Enhancers, that was the millennial one. Ended up getting divorced, and he actually bought me out in the end. So that was about 5 years as well. Along the way, my dad died, and I inherited his original financial planning business. So that happened in between those two. So I had that all kind of going consecutively. I inherited that business with $1 million worth of debt. And in a year, I turned it around, paid all the debt down, and then sold it. So those three businesses were all multi-million-dollar exits. Like just over two-ish. I always say I became like an expert in selling like $2.2 million businesses. And then I had gone into online bookkeeping and accounting when Xero became really big in Australia. So we had a company called We Love Numbers that was kind of a monthly fixed fee retainer for entrepreneurial businesses to do all of their bookkeeping and accounting. And we launched that in Australia and in New York. And then we ended up experiencing like significant burnout and decided to shut that down. But we did sell the assets. And I kind of just want to mention that because even like a shitty situation where we definitely lost money, but we were like, my ex-husband was like super burnt out. We'd actually just raised $750,000. The day we closed on the deal, I looked at him and I was just like, there's no fucking way that you can run this company right now. Like you're totally burnt out. And I'm on three other businesses. Like we can't do it. And in our integrity, like we're just going to burn through that money because we know that the model isn't quite right. We knew we had some significant problems. So we turned around and gave all the money back the day after that we had received the final investment. And then we sold the client lists in both Australia and the US of that business as well to recover some of our costs. And then along the way, I'd also started the League of Extraordinary Women, which is still going and is actually about to rebirth, which is really exciting. But that was a community for female entrepreneurs, just trying to improve their ecosystem of entrepreneurship to have more women participating. So we were doing like events and conferences and things. And then I had turned all my companies remote and saw the opportunity there and then went into remote recruitment and global staffing. And that's how I ended up doing the tech company later. I feel like
Wow.
it's like a lot to kind of,
Yeah.
it
Yeah.
all tied in and it was all logical in a way, but there's a lot going on. There always is
Yeah.
with
And
me.
I like that each one, at least for the past couple that you mentioned there, it was like a very strategic selling of assets where you are selling them and building relationships. Because each time that you're selling these clients, I'm assuming that that relationship is very strong with the
Yeah.
buyers. And it's a good example of like consistently exiting when you have relationships with people. Was there any like recurring buyers of client lists, or was it different people each time?
No, it was different each time. The first one was a mess, so I'll say that, and it's worth sharing. So the way we negotiated the deal, and I think this is really good advice that I give to myself and anyone else. Whatever you end up with initially, make sure you're happy with that because it's very common that whatever the tail of the deal, whatever's coming later, may not pan out the way that it was meant to. I don't know if other people have talked about that or experienced that, but I was not happy with what we got up front in that deal because we did like a 60-20-20. So 60% of the purchase price up front and then 20% after 1 year and 20% after its second year, which is quite a long time as well. And it was based on whether the clients would drop off or not. Which ultimately I understand now, really hard to decide whose fault it was that a client left. And we had such strong relationships with those clients, and I investigated everyone that did leave. And they all left because of the firm that bought them, but was really hard to prove that. And our deal the legal work didn't really make provision for that too well. And also they got ahead of it. And what they did was they sued us. So they knew that we were going to be suing them for not paying us because they didn't make that first payment and then they weren't going to make the second. But they got ahead of us and they like created a lawsuit and created a damages claim for exactly the amount that they owed us, that we then spent 2.5 years litigating. One, like needing to defend ourselves, but two, trying to get our payment for what was rightfully ours. And we never ended up, we settled out of court, $200,000 in legal fees, and we settled for $100,000 in our favor, but we were down $100,000 in 2.5 years. So that one didn't go too well. But the other two went well. I sold them to people I knew. So that was kind of to your point, like the relationships really do matter. The second one I ended up selling to my dad's business. I sold to my stepbrother and another guy, and they were working together and wanted to grow the company, and that went really well and really straightforward. And then the third one was sold to my ex-husband. He bought me out. So that was obviously like totally different. It's if one partner buys you out, it's usually, well, I guess that can go a lot of ways as well. But yeah, that went pretty good. And then with the accounting firm where we sold the parcel of assets, I think we did have strong relationships with the companies that bought them, because I think they were companies that we were using to kind of do the official tax return part. And so we just like offered them the clients and they were like, yeah, that's great. And it was like pretty straightforward, and it was a fire sale. So they probably got a good deal and, you know, didn't kick back or anything. But yeah, a lot of lessons along the way.
Yeah. And a big one that you highlighted there, which it has come up very frequently. Earnouts are always not what it's made out to be, whether or not, you know, the buyer maneuvers around it in some way. But what you shared is a prime example of how sometimes attorneys are the ones who win in the exit, or they
sometimes, often.
yeah, very often. And it's very difficult as the person who's, you know, in the trenches running it, to kind of just have to fight to get what was agreed upon. And I've heard it time and time again, and it's a rough one, but a great lesson, very, very great lesson, not only for yourself, but to share. So let's talk about preparedness, because this is like, by definition, as a financial planner, you're prepared to go through this as that's the business. So what can you share with people that are listening around how to prepare?
Yeah, and I think that was a cool observation you made about having a background in finance and how that does kind of definitely give you an advantage in business. I think I'm grateful for that. In terms of preparedness, I think it's like, one, I always like to build a business from the frame of mind that it can one day be sold. So I don't want to build it that it's so reliant on me, unless strategically I have another reason for doing that. But 9 times out of 10, I don't. I don't like doing all the work in my businesses anyway. I really like to lead. But I try to build businesses that can be sold. And that is really important, because if you get to a point where you decide you want to sell, but you are not set up to be a viable acquisition for another company or person or what have you, you might have to spend a year or two getting yourself ready. And that's really hard to do when you're already burnt out. So that's like early preparedness, I think, is just like knowing that you may one day want to sell this. And I do feel that you build a better business if you build a business that could be sold at any time. It also leaves you open to someone walking in one day and being like, hey, your business is really interesting, I'd like to buy it. And if you've kind of always built it with that lens that it could be something that's systemized and streamlined, and you're on top of the financials and you have the information, the data, and, you know, all of those kinds of things. So that would be like my first one. And then I guess once you get more serious about wanting to buy, it all comes down to who's your potential buyer, how do you get in front of them, how are you thinking about the valuation. So it's really just starting to get the ducks in a row about all of those different things, and knowing that, you know, you can literally do anything with a deal. Like, you can do freaking anything, and there's many different types of buyers. But I think starting to really think about what that will look like, and getting, obviously, things like making sure your financials are all up to date, you know what your data is, how many customers do you have. Like, you need to have all of that and know all of that to get to a process where you're going to start selling the business. And depending on what method you're going to use to sell it, whether it's just your network and one of your staff members, a friend, whatever, or more than likely you're going to be using a website like Flipper or a broker or a consultant of some description to help you. And, you know.
Yeah. And you briefly touched valuation. So let's talk about strategy. Like, how did you negotiate your valuations for each one?
Yeah. So Financial planning, there was a lot of data points around how other business had been valued. So that one is like, I think sometimes there's more or less of that depending on the industry. So that was like kind of straightforward. It's a recurring revenue business, and they usually do a certain multiple of recurring revenue. So you just want to get really clear on what your actual recurring revenue is, because you highly likely have some non-recurring revenue in there. And then you would be, positioning whatever the current target market rate is. Is it 2.2 times? Is it 1.8 times? And the first business, it was pretty straightforward based on that. When I sold wealth, and that was also like an assets under management thing, like there was a lot of just predetermined data of how valuations went for businesses. Some other businesses I sold, almost all my businesses are recurring revenue, by the way. So I think, because I've sold then other businesses and packages of clients and things. And the way I tend to look at it is things like, well, what is the recurring revenue, and how to strengthen my multiple on that? I want to be able to historically show like that these clients don't leave, and the likelihood of them staying is X. And that way, I can start to get a multiple that's bigger because there's more certainty around the likelihood of the clients staying, just to give, some part of the insight. Obviously, there's a lot that goes into it, but
Yeah.
potential for growth, if you're onboarding, if you can show, this is like good stuff at preparedness, I suppose, but if you can show that you also have a marketing engine that is driving, 10% month on month growth or 30% growth a year or whatever it is, you're also selling, if you're selling the brand, you're also selling this future upside if they don't mess with it too much. So finding all those points that really show this is a good business that is systemized and engine-like in as many ways as possible will really strengthen the valuation.
Yeah, that's a nice thought, that basically if it's systemized, the processes are in place and the team is there, somebody just needs to kind of plug in. It shows that it can actually be sold, packaged and sold. So let's talk about the tech company, the most recent.
Oh, this was Sarah getting cocky because selling founding, scaling multi-million-dollar service businesses and exiting them got boring. And so I was like, oh, I should try to do a billion-dollar tech company. And so I did. And it was bloody hard. It was so hard. Oh my gosh. So I had a service business that was and recurring revenue of global staffing. But it was manual. It was like a typical recruitment staffing agency. And I was like, I should turn this into a tech play where we basically do a job board and candidates sign up. We get as many of them as possible, and, people post jobs. And because it's global, we handle all the payments. It was a great idea. Timing was impeccable. Like, we started working on it in late 2018, 2019, and then we were launching like soon after COVID, when the whole world went remote. Like, there was a lot of favorable wins. But having been traditionally like a bootstrapped founder and someone who has funded all of my own businesses, we did raise money in that one company, but we gave it right back. So we really didn't have any experience of doing investor relations and all that sort of stuff. Honestly, so I went out and I raised money. I raised $1.3 million in what I would call like two kind of pre-seed rounds, really. And mostly from friends and family, people who knew me, people who had been watching me for 10, 15 years and said, if you ever do a funded company, I'll fund you. And then it was just like we were on the funded company path, which is such a different path. Now I'm like, have whatever my run rate is, and I'm burning through my capital. And the first couple of years was great. We had the favorable wins. We raised the money pretty easily. I should have raised way more. I just didn't know that was what you should do. I was still conservative in my thinking of like, I'm only going to raise what I think I need. But I should have and could have most likely raised way more money early on. And I didn't. I raised the 1.3. First couple of years were pretty good. 2022 rolls around and I'm like, okay, I need to raise, started with thinking $10 million, go out to the market, and just had like the worst year of my life trying to raise money. And I didn't raise a single cent. I spent a whole year on it, which also isn't good. Like, when you're raising for that long, like, everybody in the industry probably knows that you're not getting the money that you need to get. It was a really tough year for raising money, probably the toughest in a long time. And I think I had about 400 VCs, that I was dealing with and talking through in various different stages of meetings. I didn't raise a dollar. So it was soul destroying. And in the meantime, we ran out of money. And because I was so egoic and excited about this opportunity, I put all my previous wealth into the company. So didn't use my financial background. I basically got to the point where I just got into that mindset of like, and this is another thing that's just for people to think about, is like, play to your strengths and play to what lights you up. I'd always had multiple businesses, and this was the first time I only had one. And I bought into the idea that to be really successful, you have to focus. And maybe for some people, and maybe for others, we thrive with, variety. And for me, all it did was create much more like intensity and seriousness and pressure around this one business that I was like putting everything in, and I had people's money in and I was putting my money in. And then once I got into the thing where I'm like doing the fundraising meetings, the money's running out, just keep going, just keep going. We started taking on some debt in order to bridge things. And in the end, I remember the night I put in my last $35,000 to pay wages, and I went to sleep. I was like a robot. And then I woke up at 2 a.m. I was like, what have I just done? I've just fallen on the sword for this company. There is no more money. I'm not going to raise any money at this point after being at it for a year. And I just put all my last dollars in to pay wages for like one more month, where I've already cut my team down to like half the hours because we're struggling. And I spent the whole next day on the phone with my mentors just crying. I'm just like crying and crying. I'm inconsolable and just processing like what had happened. Like that whole year was just, it was so difficult. So yeah, that was like one of the most humbling, difficult moments of my entire entrepreneurial career. I feel like it was a complete ego death, and whatever identity I had around entrepreneurship kind of, at least for the most part, died in that, in those days following. Had to kind of tell my team, like, it's done, we're out. They knew of the journey, but then it was like, okay, this is what's happened. And I basically then set about for the next couple months trying to find a buyer with my team. We did have revenue. I think we had about 25,000 a month in revenue. So I had some revenue to keep like a little bit of staff on, but we also had debt payments because I'd taken on debt. I hadn't paid myself really the whole time. So there was nothing I could cut there. I'd cut everything I could possibly cut. But I ended up having like 4 or 5 interested buyers pretty quickly, all very different. And that's one of the things, like when you're in a fire sale, when you're not prepared, when it's not what you're wanting, it's a lot harder to kind of try to close deals. And you certainly can't really, you're not in a position of power when it comes to negotiation. But yeah, I think it was either 4 or 5 interested buyers. 3 of them ended up disqualifying pretty quick. And then there was 2 and that I got down to. And this is all in the days where I'm just like, God, I don't know what I'm going to do, but like, I've got to just try to do something, because there's a whole tech product, there's customers, there's revenue. Like, it doesn't even make sense that we weren't able to raise money. And I'm still thinking, we've got to try to get this thing to keep going, even if it's without me. And so it came down to 2 buyers, and this is interesting, but they were very different buyers. One was a large tech company, and the other was kind of just like a more typical grassroots, older entrepreneur who'd had a bunch of different businesses, never in tech. And his deal was potentially more attractive up front, but I didn't feel like he was the right person to sell to from like a personal perspective, I suppose. And having gone through what I went through all those years ago where we got sued and all that, I knew it doesn't matter how good the deal is. It doesn't matter how good the contracts are. Like, don't do business with people that you don't feel that kind of alignment and connection. So, and it wasn't that he was a bad person or anything. I could just feel that there was just something between how I worked and how they worked that was too different, and that it would end up being difficult. So I walked away from that deal and ended up selling to I did a deal. I didn't quite sell at that point to a larger tech company. And the founder of that company was awesome. Like, I think that man is amazing and I enjoyed all my interactions with him. And so I kind of made my decision based on that. And there was still opportunity in either deal. I would have been able to keep equity in the first deal that I turned down, whereas not in the second. So that's where it's like, okay, maybe it wasn't as good. But anyway, I worked on the company with them for about a year. It was kind of a deal where they purchased an option to buy us and agreed to fund us in the meantime. And then, yeah, in the end, we came to an agreement for them to buy us. And I ended up getting pregnant again and deciding that I was just too burnt out from the whole thing. So they ended up just buying us, and I didn't end up going with the company. But it wasn't, anything. It was kind of just getting out from under it at that point. So, yeah, that brought me to my knees.
Yeah.
That whole thing. And then I took 8 months off because I was just so burnt out from the whole experience. And here I am today, starting to get back into it.
Yeah. And you're getting back into it in a big way. I think there's a lot of lessons in terms of what you shared. And I think something that I'll share as well is that you're not alone in terms of the last 4 years or so, 3 years. After 2021, that was the peak where everybody was raising money, and then it would just crash in terms of valuation compressions just across the board. So everybody was upside down. And I think what you described of 2022 when you went out to raise, that was, 2+ years of CEOs across everywhere that could not raise. Didn't matter who you were upside down
so
completely. Everybody was doing down rounds. It was just pure pain. And it still is today. A lot of people don't realize that, but there's just a lot out there where people had done, high up valuations. And I would actually wager to say that you were fortunate to not raise more.
Yeah, I mean, from where I sit right now, I'm totally peaceful and happy. More than peaceful. I'm like stoked with how everything went down. And I think the greatest gift, even from taking myself to zero financially, was to just realize like none of it really matters, and it's all just a game. And if I did that before, I can do it again. And I get to start with 20 years of experience under my belt now. And maybe not take it so seriously this time. Just have some fun, and do not put your last $35,000 in after being a multi-millionaire.
Yeah.
But yeah, it was just like, I remember the start of 2022, I go out with like really strong growth. Like we were 10 to 15% month on month since launch. It was like, who wouldn't invest in something like that? We'd only been going for like 18 months. Our numbers were super strong. And we had like whatever our valuation was, I can't even remember now the numbers, but I kind of like at the very start of the year, people were interested. I had a strong valuation, and then it was literally like it just turned, and I'm only like halfway through these conversations, and all of a sudden they're wanting to put the valuation down, and I'm like, no way. And then all of a sudden I realized, wait a second, like it happened so fast, going from being like confident in my numbers, my valuation, this is a no-brainer, let's do it, having that early interest, and then literally in that period, which was pretty short in early 2022, it just all shifted. And
Well, you're not alone. It's what I was trying to get at. And that takes us to the finale. Knowing what you know now, what would you tell yourself 10 years ago?
Just probably what I just said. Like, it's all a game. Have fun. Don't take it too seriously. If it's not working out, don't beat the dead horse, or whatever that saying is, like, move on, change something, go do something different. Like, know that just have fun with it. Don't ever get too serious about it, because that was really my downfall in the end. And it is really fun. Like, it's so fun. And like I said, the best time is actually, I'm kind of back in it, even though I have 2 kids and a bunch of responsibilities and I do have a lot to lose in a way. I'm still back in it, where I'm just like, you know what, it's all upside from here. And that's like super exciting.
Yeah. And you briefly touched on, before we wrap up, I want to mention that going from, bootstrapping, where you're able to really predict recurring revenue, you're growing that over a long period of time, to effectively turning on the burn machine, where, a lot of people going from not used to burning things to burning $1 million a month or 500K a month is is a whole different mindset. And you mentioned it and brought it up really well, in that it's just a complete different world where
Yeah.
it's a cycle. And a lot of people don't really understand that world of just raise money, burn, 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 burn. And it's so unique. And
Yeah.
it's cool that, we get to experience that. Sometimes it works, sometimes it doesn't, but it's fun to experience it and then go back and do something else. And like you said, it's all upside from
Yeah.
you.
I feel like the other advice is just like know your strengths. Like that world didn't work too well for me. I don't want to go back into it. But what does work really well for me is like building things from the ground up and like kind of this growth within reasonable parameters. I'll still sometimes invest in things, take small losses and hits along the way when I know that there's a good bet to take. I think we all do that. But like you said, totally different mindset. It didn't work for me.
Yeah.
And I'm good with that, So knowing your strengths, knowing how you thrive and leaning into that.
Excellent. So what are you working on now? I know there's a couple projects, but what are you working on and where can people learn more?
Well, I'll tell you the thing I'm most excited about is follow me on Instagram if you want to just see what the hell I'm up to, because it's a lot of things. But the thing I'm most excited about is the League of Extraordinary Women. So we're rebirthing that. We were an events organization. We had tons of conferences, really amazing things we used to do. And then when COVID came, we just kind of put it on hold because we weren't having conferences anymore. And just in this season of me taking some downtime, I kind of got the sense of what the league wants to be next. And so I'm really excited to kind of announce that we're back, we're up and running again, and we're launching a distinctly female, distinctly feminine business operating system. So there's a lot of business operating systems out there like EOS Traction, Scaling Up, Bloom Growth, I think Lean Canvas, all these kind of business models largely have been built from the masculine. No, not good or bad, but we don't have something that's built from that more feminine energy. And so, yeah, I'm really excited. We have this new business operating system that is distinctly feminine, designed for women to really not just participate now in the business world as kind of like as men, like we're adopting all those same ways that everybody else is doing it because that's how business has always been done. It's time for that to all evolve and expand, where we get to bring our innate gifts, which is our intuition, our collaboration, our connection. Like there's some really beautiful gifts that we get to bring into the world of business, and the world of business gets to expand to include that and just get better overall. So that's what I'm pretty lit up about right now.
Very cool. And where can people learn more about it?
Probably Instagram again at the League Women, or jump on our website, leagueofextraordinarywomen.com, and sign up for our newsletter. That's probably the best, easiest two places to stay connected.
Very cool. All right. Well, wherever you guys are listening on iTunes or Spotify, the links that Sarah mentioned will be in the show notes. But thank you so much for coming on and sharing everything.
Thanks, Steve. It was awesome.